The ultimate crypto macro guide, baby dolls. I'm going to go through with you a very lovely presentation done by my friend Raoul Pal. I'm going to go and explain for you more in detail about his presentation, what's going on. This is going to be your definitive guide. And I'm just going to give you the too long didn't watch, okay? The juiciest news up the front is that we are on track. Global liquidity is rising. Things are going to get better. However, of course, we thought they were meant to get better 15 months ago. Okay, they didn't get better. The business ISM cycle reflected worsening conditions for an extra 15 months. They still haven't reversed up as we use the business ISM data that I show you all the time. If you've been watching my channel, it comes down to here, friends. So I will just throughout the weeks, throughout the next month as well, keep updating everyone and let you know, because this is when you really need to be aware of it, right? Because we just had 5 red monthly candles in a row and you want to know, hey man, is everything bonked? Is crypto ever going to recover? So I think, yeah, it's going to get better from now on. But yeah, I'll tell you right now, man, when we were like last year, January, we were meant to recover up just like every other cycle. Look how long we went down. 6 months, 12 months, 10 months, and we're in 30 now. This is the worst in 45 years, just so you understand it. Because if you understand that, then you know it's got nothing to do with your particular coin. It's not, oh, this founder is fat, or this founder is, he disappeared, or this other founder drinks a lot of soy. Yeah, it's got actually nothing to do with that. They're all Fugazi narratives that we attach to the price action going down. That's just what we do as humans, right? We try to like basically tie everything together and see patterns appearing and stuff out here and try to draw conclusions just to try help us feel better. Now, what I'm going to do, I'm just going to show you, friends, what it all comes down to. We've got some amazing stuff from here from Raoul Pal. We're going to go through it, right? So this is an extremely important chart. This is like your global long-term macro information here. You can see that the labor force participation is going down. And then also US government debt as a percentage of GDP is also going down. So this is basically, you can invert that chart. All right. So that's actually what they've done here. They've just shown how, look what's actually happening, friends. So basically we live in a world where we can get dopamine from a lot of places besides having sex. That's literally what it comes down to, okay? You know, you look at your phone, you play with your phone, you play with your own lollipops. Out here, you've got TikTok, you've got Instagram, you know, you can go and say racist stuff on Facebook just for shits and giggles. There's games everywhere, you can go gamble. All of this technology is pretty much improving our lives so much that we don't need to get dopamine from going and having sex. So pretty much people are having less babies, okay, over time. So what do people do? They go spend their time in a lot of other things. Now, actually, this is basically reverberating through every first world economy. Japan, Americana, literally every first world country. Canada, Australia, you name it, right? Even China's going to start to have it as well. So as an economy gets richer, people just want to reproduce less, okay? Instead of having like, you know, 3 or 4 babies, you have like 1.2 on average, okay? So what's been happening over time is, so remember, this chart is inverted, okay? That's why this chart is inverted. So what's actually happening is, over time, people are working less as a percentage of the population. So pretty much all the baby boomers, they didn't make enough kids, okay? The baby boomers spiked after World War II, made a lot of people, but babies. And then what they've been doing is taken on a lot of debt. So you can see this scale actually goes up as you go down. See, it's 120% GDP. This is on average, is US government debt. So yes, over time, there's less people to replace and they have to get more debt to make up for it, okay? So once you've seen that, you go, oh, I know. The answer to this is pretty much up only crypto. It's up only Bitcoin, it's up only crypto, okay, over time. Why? You'll get to see it over time, but, you know, Bitcoin going up, friends, we have a vehicle now, and it's going to get very, very juicy as I crank it up for you. So there's nothing that you can do to basically stop this. That's why a lot of economies, a lot of governments, they try to immigrate people. They've tried literally everything. Every government has tried everything. They've paid people. They go, listen, just go have sex with anything. If there's a tree out there, if it's barely moving, go have sex with it. Try to have babies. People don't do it. They try to give money. I remember, friends, in Singapore, they actually, they started basically, they did this campaign once for like women over 30. They go, hey, life's getting short. You know, basically go and have a baby, even if it's out of wedlock. Literally, the Singapore government did that to try to promote women actually having babies over the age of 30. It didn't work. You know, it tried. There was a bit of a burst. They tried to give you some money. It doesn't work, right? Check out the chart here, right? Look at this. The Fed's net liquidity injection going up over time And this is US government debt as a percentage of GDP. Check that out. So over the years, this is literally since 2004, this was already happening. The GFC just accelerated it. See this big crank? And this was zombie virus as well. See these step functions? It was already happening. So this was happening over time. It was going to happen over time, all right? So what it's just showing you that over time, yeah, everybody around the world, we're not having enough babies. And basically, they have to get supported because we're living longer. Yeah, you're not dying at like 60 anymore in the coal mines. People living to 80, 85, 90. That's being pushed over time, okay? So who's going to foot the bill? Well, only the central bank can. But what does the central bank do? It's robbing the middle class, okay, by printing money. Now, I've got another cool chart here for you. Check this out. This is the total global liquidity with Bitcoin. You see how these go up over time, friends? Check this out. You see how they are matching over time? Look at these. Look at these 3 boxes. You see how they are literally matching up over time? That's literally, you know, when you look at our global liquidity index, that's actually it right now. You see that black square, which I'll just show you right now. This is what it looks like. You know, we've been looking at, you know, like Raoul Pal made the chart famous, and, you know, Colin talks crypto. Shout out to Colin. He basically did the fractal. A lot of like newbies have like been following him, and it's kind of funny, man. It was literally so cute. If you go to Colin's videos, his comments, people are saying, Colin, we should put you in the Hall of Fame next to Satoshi. And I'm like, bro, what? Do you understand? Are you serious? This is it. Bro, we got... These people have never seen squiggly lines as drawn up. It's going up with a squiggly line. I love humans, man. Stuff like just, it doesn't take much to just be like... Yeah, so see this yellow line here, global liquidity? That's pretty much it, friends. So, yeah, God bless you, man. It's the funniest thing ever. It's real. It's real. Okay, so Bitcoin over time correlates up with it. Look at the first cycles though, right? Look how much they decorrelate out. Now in 2021, we got truncated, which sucks, but in the first 2 cycles, Bitcoin accelerated above the global liquidity injection because there's just so much mania. Okay, actually, if you look at 2021, it really truncated with it. That's why, friends, you also have to be careful because look at this part. If you zoom in here, right, look what actually happens, right? Liquidity is going up and Bitcoin's already in a bear market. All right, but look where we are now. Okay, we are literally at the point where things are about to go pumpamental. All right. Now, this next part I'm going to show you is going to be very, very interesting because we have a table here. Look at the far right column. Okay, this far right column is a percentage of your annual return, so your yearly return. Okay, the first line here is Bitcoin. Okay, the first 3 are Bitcoin, Ethereum, and Soylana. Look at Bitcoin, 130% per year gains. Look at Ethereum, 113%. And look at Soylana, 140%. Now, you can see those numbers are big. Now, why they're interesting, see that 100%? Friends, the US government, so all the world governments, they tell you and me that the KIPI, right, the Consumer Price Index, the KIPI, is growing. Oh, you're only losing 2 to 3% of inflation per year, which is a load of bullocks. Okay, it's not. They are actually printing 8%. They're actually literally debasing at 7, 8% per year. Let's round it up to 8% because you don't know where the money's coming from, right? You know where it's all going. But they do 8% per year. So they this is kind of funny, right? This is what they do. So they're stealing from the population 8% per year. And then they're telling you that inflation is up like, 2.5% in the year. And you're wondering, you're like, where the hell did this extra 5.5% go? Well, what they're doing is they are using that extra 5.5% per year to pay off the debt of the governments, right, over time. So what we're doing is, so we have 2 alternatives, okay? We have 2 options. The government could basically put a gun to you and me in your head and they say, hey, your tax rate is 90% per year for the next 10 years. You work for me now, bitches. That's what they could literally do. We go, no, Mr. Government, no. But obviously no one's going to do that because people are going to have a revolution overnight. But that's what if they want to pay off the debt, you tax everyone 90%. Well, you literally become a slave and you work for 10 years. Okay. And if they do that, it gets back to a manageable area. Then they can start the Ponzi bit again. Okay. No one's going to do that. Okay. Because good luck getting elected, telling everyone, hey, by the way, elect me. I'm going to make you all my slaves. You'll get taxed 90% plus for like 10 to 15 years. That's a depression. All right. Now the government has an alternative. That's taxing you from above. So instead what the government does is, okay, US Fed, all the, major loser, bugger eater scum, what they say is they go, no, we got a better idea. Instead of taxing you minus 90% in 1 year, what we'll do is what we'll do is we will basically debase you something like -7% per year, okay? And we'll do this over like 10 to 15 years. So instead of you feeling it hard in 1 year, we'll slowly burn away at your purchasing power for 10 to 15 years. And what they say, they never tell it like to you like that. They go, don't worry, we're going to make up for it for growth. The economy's going to boom, boom, like you've never seen before. Things are going to be great. Oh, it's going to be great. Don't worry that this leadership is going to change. It's going to be new. That's why their friends are always dangling that big fat lollipop in front of your face. Oh, somebody said the N-word today. Come and donate to them. Oh, look at this other person, race baiting. Oh, look what Elon Musk saw on TikTok. Oh, wow, here's another like slightly grainy UFO video just to distract the masses. Oh, here's Putin, Ukraine. Do you see what I mean, friends? All load of bullshit. Oh, here's China and Trump. Okay, who's got a big wheelie? You see these, friends? The population is just literally just watching this, getting hypnotized all the time. Was in the background, they're going, you know what? Screw you all. Print. That's what they're doing literally every single day. Okay. Now, remember, the number you have to beat every year is 8% per year. That's how much they're printing. Okay. Now, actually, I've checked out Saifedean Amus, a couple of other people as well. They say the real number is like 11% per year because you've got to add, they say you've got to add the money supply plus the inflation on top. But the way I kind of see it is, no, they print the money. Maybe I'm wrong. Okay, they print the money and then part of that money is the inflation. But either way, you got no choice. You have to be in crypto. Look at this. If you look, remember, friends, if you are not gaining 8% per year, you are literally losing. You are getting scammed. Okay, they're printing 7 or 8% per year. They're telling you 2.5% inflation. Like, all right, you got to be 8% per year. They're literally debasing you, right? Look at friends. On the left-hand side is the Nasdaq. The Nasdaq is giving you 16% per year. That's the greatest. The Nasdaq. Whoa. Johnson & Johnson. Amazon. Dr. Google McDougal. Wow. Tesla. That's 16%. That's like, whoa. Now look how junk everything else is. The US large cap. So the S&P 500 is 12% per year. Okay. Now normally it's actually 8 over the past 100 years. But why is it 12 now? Because they're printing an accelerated amount. Okay. Because they print more, the cost of services goes up in the index, and then basically there's higher profits for the companies, okay? Look how garbage it gets here. US small caps, the Russell is 8%. Now look how terrible it gets. REITs, real estate is 6. US treasuries is 2. Preferred stocks is 3% per year. High yield bonds is 3% per year. This is IQ bonds, so even like risky junk bonds, emerging markets bonds, so like Brazil and India and all these other ones, emerging market stocks, 1% per year. Oh yeah, it's really bad. It's really, really, really bad. Look how terrible it is because their countries are debasing, bro. Look how they're getting cucked. Look at gold, friends. Gold is giving you 5% per year. US cash is giving you literally 0. Commodities is giving you like -1% per year. You're like, oh my gosh. So if you have a look at this chart, you're like, whoa. Pretty much, friends, if you're a cuck, you got to be in the Nasdaq, okay? If you're not a cuck, you just got to be in crypto. That's it. Nothing else comes close. Remember, your hurdle rate is literally 8%, okay? You are getting absolutely molested in literally everything out there in the world. You're literally getting molested, all right? So, but now you're wondering, hey, when's crypto going to go up? Well, you know, Bitcoin's going up. It's just taking time to get the launch pad ready. And now we're just going to crank it a bit to be smooth. Baby, I just got done to me. All right, now, the overall theme of all these. So you understand, there's an aging population. The debt's too big. The debt has to keep growing. They didn't. Baby boomers didn't have enough babies. Now everybody has amazing Game Boys. They play Pokemon. So we get a lot of dopamine. We're gonna get enough dopamine relative to sex. Just to let you know, friends. Actually, it's actually real. So when you have sex, I think you have like I think you get like 400 or 500 dopamine units. Just to let you know, meth is about 2,000 and chocolate's about 100. So I remember these dopamine units and stuff out here. Well, here's the thing. Just by looking at your phone and stuff out here, you're getting like enough dopamine hits in the day. It's literally replacing all that. You're just like busy and you're just looking after some stuff and all these things. You know, there's Botox for girls and here's guys and like, oh, here's another game, another gambling thing. And like, you understand? There's like just all these things available. They're tapping into your brain to do this stuff out here. Now, the overall theme we're going to show you is we're bullish for the future. Okay, look at this. So this is an index that Raul made. It's the Economic Surprise Index, and it's correlating with the US dollar with the US 10-year bond yields and then a 2-month lead. So actually this thing played out, friends. This is from 2025. So actually what happened is the economic surprise thing went up. So it's funny, right? All of these things about conditions, they get priced into the US dollar and the US 10-year bond yield. So people price it in today based off what they think is going to happen in a couple of months in the future. All right, just to let you know. So remember, the US Treasury, the bond yields, they are including of the risk-free rate. Now let's check out Donald Trump. Okay, our president Donald Trump. Look at his. This is a chart of the black is the US dollar from the last term of Donald Trump and the US dollar of today. See how it just like has rocketed down. So pretty much they're following the same thing. So we might find the US dollar is going to go down just like before. Remember, friends, you're very, very familiar with the chart that I always show you here. It's this chart. This is the US dollar, right? So it's literally just rocketed down. And now it might come up and just like start to grind down over time. And if you recall, that's exactly what happened down here. See, just on the US dollar just go down, 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 down. Now, forget every narrative. Every narrative you're going to see, Uncle Peter Schiff, as the US dollar goes down, Uncle Peter Schiff is going to be like, the dollar, the dollar, the dollar. He's going to say that. A bunch of bullshit, friends. The US dollar ain't going away, bro. It is 87% of the world trading volume. The US dollar, okay? 50% of all the debt in the world is US dollar debt. 50%. Okay, so you got 50% of debt is US dollar, 87% of trading is freaking US dollar, right? That's also why, friends, the US government, that's why they put CZ in jail. So they could lock down Binance, so they can control Coinbase as the conduit for Bitcoin trading volume, so it can all go through USD that they control. Okay, because they didn't want China or CZ that they can't control. They want to control all the volume. They want gold to be priced in US dollar, which it is. They get oil to be priced in US dollar. Remember, friends, Ghaddafi from Libya? What happened to him when he said, he literally, friends, Ghaddafi, man, do you remember Ghaddafi? You remember, friends, Ghaddafi, what did he do? He literally went up to a couple of other dudes around South Africa, in Africa, and he goes, hey, let's price gold in the euro. Let's like go off the US dollar a bit. Let's just hold some euro for that. Guess what they did? Okay. The Coconut Intelligence Agency came in. They got a very, very sharp object. They didn't get spoony. They got knifey. They literally put it up his rectum and they decapitated him. And they paraded his body around Libya. Okay, so that's what they did. The Coconut Intelligence Agency funded the rebels in there to come take him out. Okay, it was all because he didn't even say, let's make our own currency. He literally just said, let's price gold in the euro. Gold and oil. That's it. In the euro. Friends, the euro is 50% of the DXY. Do you know that? The index. So it's like he just the fact that he went like one step off the euro, they're like, get him now. Because we know what this slippery slope leads to, okay? So you're going to see Uncle Peter Schiff, as the US dollar go down, he's going to be the dollar, the dollar, the dollar. It's going to be a bunch of BS, okay? It's repeating just like 2016 to 2020. The US dollar goes down. Remember, everyone's debts are priced in US dollars, 50% of the world. So as the US dollar gets weaker, every other currency is getting stronger. So it helps them. It stimulates them. Now, check this price chart out. Okay, this is Bitcoin with Donald Trump's last term. Okay, obviously, we saw Bitcoin go from $1,000 or whatever here and then went up to 17 or 20K. So it's very, very nice to see, oh, what happened last time, right? We all know that, you know, crypto had the biggest renaissance period ever in the 2016 to 2020 cycles, 2016, 2017. That was that peak. All right, now this chart is also really cool. Check this out. This is global M2, all right, from Donald Trump. This is the liquidity, and then this is the red is today. So here it's beaming up. Remember, I just showed you Colin's chart? Yeah, it's the same thing happening right now. In fact, it's actually accelerating higher and faster than it did in the past, which is very interesting. Okay, so it's literally like, whoa, it's actually beating it. But that's why these things don't work one for one, because you're probably like sitting there with me. I'm like, bro, they're actually printing faster than they did last cycle. Sorry, in the last Trump cycle. And like ETH BTC is getting cucked, bro. We've had 11 red out of 11 months. 10 of the 11 are literally red. But that's what it is, friends. Like they just don't work tick for tick. That's right. You got to hold long term. Now, check out this epic chart as well, friends. This is literally the world global M2, the global money supply. Check out these cycles. This is like that first part. Look at this, the second part. And now we are onto here right now. Okay, if you notice how, look what happened with Trump. It literally goes up interesting. It goes up, comes and back tests, and then we have a big run up. You see that? Look what happened in 2019, 2020. We had zombie virus. We had zombie virus here. It went up, went down, and then they printed, and we went up, and we shot up. Now, here's the thing. If you look at this distance, you're like, Somi, that is a very, very, very big distance. Why didn't we have an amazing cycle last cycle? Well, this distance, my friends, it looks big to us. But the thing is, they don't print money just for no reason. They print money because they have to cover the debt and the GDP collapse. Okay? So the GDP collapse from the zombie virus was so big, we lost like 20% GDP, 18% GDP in a quarter. So the government has to print to make the gap up. Okay? So the first printing is just to fill the hole, and then the excess is the excess money liquidity. Okay? But look what's happening right now. We have just had up a rise, the retest, and now here we are right here. This is literally us right here. So we're hoping that we are going to move up and go as far as we can go. This is, I guess, the 2026 line. We'll see. We'll see how far we go up. It's going to screw around. And then, yeah, basically Uncle Bobby's going to be our uncle. Now, also check it out. You can actually overlay it with Bitcoin. So the chart I was just showing you, look at it. So see how they tend to move up over time. See, it's global liquidity. Okay, it has nothing to do with the Bitcoin halvening. It's global liquidity. You just see these over time. The waves go up over time. Everything goes up over time. This is where we are right now. Okay, this is exactly where we are right now. See this black line? This is the global M2. It's printing. Okay, so all the governments in the world are debasing. Every single one. They all pretend to fight and stuff out here, but it's all a bunch of Fugazi. Even a more closer look. This was like, you know, zoom up of Colin Talks crypto chart. The one I just showed you actually here, friends. If I look at it, where is it? This is it right now. So see this zoom up of it? Up looking at it right here. So that's actually that chart I just showed you right here. Okay. Also, there's another look at it. This is the global central bank net liquidity. All right. So yeah, it's all Fugazi numbers. Okay. So the central bank prints money and they have different sectors. They go, oh, this one's called collateral. Oh, no, this one's called like the T-bill. No. This one is called a unique unicorn account. And this is called the repurchase agreement. Bro, just shut up. It's all literally a bunch of khara. All of it is just printed money. But what they do is, you got to remember, okay, a central bank, friends, remember, their goal, they have the money printer. Their goal is to keep the population working for their useless fiat. So the language that they use is very sensitive. They must make sure all the other governments holding their dog shit poop don't get spooked, right? You don't want to tell people that their Pokeball is actually a lump of poop, okay? A dung beetle poop in the middle of the desert, Saharan desert. Okay, you don't want to tell them that. You want to tell them, no, we're going to protect this. We're going to protect this. So what language do they say? They don't say, we're going to print money, baby. They don't talk like that. They say, oh, we're going to leave rates high. We care about inflation. But then in the background, they go and do the money and the Fugazi stuff out here. Okay, so it's all about perception. Because everything collapses if everybody in the economy, the rats, just walk away. If they just walk out and they go, bro, we don't want to work for this dog shit poop fiat currency, we're done. That's why crypto is thought of to be dangerous. But actually what you'll find is the US dollar's network effect is so strong, people don't actually want to go off it. Hence why we might get a stablecoin super cycle. Now, check this out. This is a correlation chart. All right, look up here, friends. See, this is R2. See, look at this correlation, almost 90%. This is Bitcoin with global liquidity. You know what this means, friends? Literally, there is a 90% correlation over history with their global liquidity printing and Bitcoin's price. 90%. That's right. 90. Literally neck and neck. Pretty much means they keep printing money, Bitcoin keeps going up. Okay? They only have one response. They must debase. Or remember, like I said to you, unless every government in the world, so if you said to me, hey, Sammy, what would make you actually sell and leave? If America was going to vote in a president who said, you know what, man, I'm going to tax you at 90% for 10 years and we're going to pay off the debt. If America voted someone like that in, it's game over for 10, 15 years. Literally game over. But you never get in there. You'd get assassinated before you could do that, okay? Because if that happens, by the way, if you tax everyone for 95% years, you and I don't have the most to lose. You know who has the most to lose? The billionaires. Because their wealth crushes down to the floor. Nobody can buy their goods or services. Nobody can pay for their properties. Only the middle class gets crushed to the lower class. But people who fall from the top fall down. Everybody gets a total reset. That's actually the Great Depression. And we actually saw that. And that is the famous Great Depression that we have here. That was when the Dow Jones dropped a whopping 90% pretty much and then went nowhere. Now, the reason why it went that much is because they weren't printing money. Okay, they want a gold standard. So literally in the Great Depression, everybody literally got reset. It was an actual giant reset. The problem was it took freaking 17 years to come back. So yes, in our world, friends, we love to live in this fair money world, but if you want to live in a hard money world, okay, I know you like it hard in a very family friendly way, it's easier said than done because the reality is, so you think, oh, you get to buy prices cheap. No, that comes with a cost. The cost is, because everybody has to sell for cheap, they don't get the confidence to invest for literally another 15 years. Not joking. You literally wipe people out. You scar them so bad. The soup lines are really long. They think life is cursed. Okay. And we know that from the silent generation that lived here in the Great Depression. Friends, if you know a lot of the taters and jiddos who lived through there, they still think war's going to break out anytime. There's going to be another Great Depression. Okay, so people who lived through that time, literally for their whole life, it took their children because they have the baby boomers. Yeah, they gave birth to the baby boomers. The baby boomers, when they hit 20 years old, it was now the 1980s. America had high inflation because they're all spending because they did not live through the war like their parents did, who are now the silent generation. Okay, so that's what economists all saw this, and that is why, my friends, the government ain't ever going to go through that again. The government's not going to go live in a world where there's 15 years of everybody being depressed and want to kill each other, right? And hence why they're always going to do the money printing scenario. Now, what I'm going to do is crank it up a bit. You having fun? I know I am. So we saw, friends, that the correlation between Bitcoin and the global liquidity was 90%. Check this out as well. This is global liquidity with Nasdaq. It is 95%. Oh my gosh. It's even higher. The Nasdaq is 95%. So you might also conclude, hey, does that mean Bitcoin and Nasdaq are correlated? A lot, yeah. That's why crypto is like the 7th S&P 500 sector. We're an extension of that. It pisses off a lot of Bitcoin maxis because they want to be different. Dude, have you spoken to people out there? They literally like, yeah, I know in your ideal world, people buy Bitcoin when things go up. But what have we seen everybody do? When they're tiny bit skits, we saw this literally a month ago, okay? In early April 2020, literally early April a month ago. What did they start doing, friends? As soon as they got some jitters over a weekend, they started dumping the crap out of crypto over the week. Remember the Bitcoin starts dumping early to front run the stock market because it's accessible liquidity. Maybe one day it'll change, who knows? Now we're going to get to the juice. It's been juicy this whole time. This is the business ISM cycle, my famous charts that I always show you, and it's Bitcoin's implied pricing. So it's showing you over time, the waves line up. So see, the business cycle goes up, Bitcoin goes up. It collapses, Bitcoin collapses. It goes up, business cycle goes up, here you go, and then we collapse, then we go up, then we go down, and here we are right now. Do you see this very, very, very long contracted period? Well, that's exactly what we've been sitting through. That's why I've shown you at the beginning of this episode. That's this period here. We've had 30 months of this long contraction, okay? Very, very painful. But it's not going to be painful forever. Okay, I know I said this literally 15 months ago, but like eventually we're going to have to stop getting cut. Now, there are models and estimates you can use for future business ISM readings. Remember, the business ISM, it's a manufacturing data. They ask all the manufacturers in America, are you buying more or less? Employees, inventory, capital equipment, are you buying more or less? And they compute it every month. The baseline is 50. If it's above 50, you're expanding your business. If it's below 50, everyone's contracting. Okay, so we've been like below 50 for like 30 months. It's been freaking contracting. Normally, it's like 12 to 15 months, max 10 months. We just had 30, my gosh. We just had a reading of like 48.7, which is just trash, okay? Now, the future ISM, see, there is a financial conditions index with a 9-month lead that you can use. So pretty much what they do is they'll compute stuff like oil, the US dollar, some commodities, stuff, and they compute it and they go, okay, the price of today and how they are, they should help you out in like 9 months from now, right? And it can give you a future estimate of the business ISM. And guess what it says right now? It says we're going up to around 58. And it's still actually rising in real time. I think when Raul posted this, he said we're going to go up to like 60. A business ISM of 60. So you can see this, friends. So the black line is business ISM. Okay, so sometimes they deviate, but the red line is the model forecast. So we are expected to go up here, bang. Right now we're like 49. And if you recall from my very wonderful charts, I've told you alt seasons only started when business ISM was 52. All right. Every single alt season was now enabled at 52. We have not hit 52. Last year, we peaked at this scam shitty 50, and then we just came back down straight away. Okay. Donald Trump winning peaked us at like 50.5, and then we scammed back down straight away. So we never got 52. Okay. You can always see here, I even marked it here. You get 52, friendship is here. Okay. We're still waiting for this 52. Now, you can also see on another chart, Bitcoin correlating with the business ISM, and it actually times with a 4-year cycle, my friend. So this is actually the same chart that I've just shown you, just overlaid differently, right? So you see this, business ISM goes up, right? And Bitcoin's charts go up. Look at this. Business ISM goes up, Bitcoin goes up, all right? Business ISM goes up here, and Bitcoin goes up. Now, what I've actually noticed, remember, when business ISM hits 52, Bitcoin peaks out earlier than everything else. Okay, so that's why crypto is like hyper volatile. When we can go really far, but we need everything to line up. We need everything to be green light, then we go hard. But then we go so hard, we actually top out before everything else because the liquidity is thin. Yeah. And by the way, that when we say top out, you got to remember, like, if you start and you go up like 20x, yeah, if you go back down 75%, you look like you top out on the chart, but you are still up 5x. So if you're looking at stock market dudes, they're like, oh, you're still up a 5x on your money. But you and I, we know the crowd is entering on the euphoria. So all they see is a 75% part down because they weren't buying in the depression like you and me. They weren't holding through that, right? So it still looks like they top out together if you are just like baselining your return. All right. But really, you don't want to be relying on that. That's why, friends, we look for these key exotic signals. Maybe Ty Lopez returns. Maybe there's $1 billion ICO raise. Maybe some sort of volatility thing is going to help us just take profit. That's all. Now, this chart, friends, is the Nasdaq with the percentage of stocks trading with less than 30 RSI. We had a big buy the dip moment, Trump tariffs, similar to, zombie virus here, China devaluations, US debt, Eurozone crisis, Lehman Brothers collapse, 9/11, Russia defaulting, Iraq war. You see what I mean? So it was the VIX spiked really, really heavy. It was literally just a month ago, and we all lived through that. Also funny, we have more charts here. This is the Bitcoin cycle top finder. This is just like Raul Powell's thing. He believes like, oh, we're like nowhere near the top out here. He's just made this index out here. And he has another chart, which I'll just show you. That is pretty much just saying the same stuff. Shout out to my friend, Mr. Space Auctions as well, flexing Conor McGregor. Just some chick, have you ever considered that Richard played the long con, got everyone to trust him with the hex cook? Is Fartcoin better than Pulse Train? So you understand? So even just some chick saying, hey, did Richard scam us or anything? Like, Richard's got nothing to do with this, bro. Just some chick, lady, okay, Mrs. Bubbles. It's got nothing to do with it. All of this is the business cycle. All of it, okay? Every story you and I see with a founder or a logo, people rugging or abandoning, they are all a reflection of the business conditions, which are garbage right now. And I've just shown you this complete look of us expecting it to get better, but like we expected that 15 months ago, but hopefully we've sat through enough now. We've sat through enough pain. Now, a good question to ask is, Somi, how long is the worst of the worst of the worst business ISM below 54? The answer was, I think, 42 months. Around 40-ish months. So it would be another 10 months from here. So I guess the worst of the worst of the worst in history is that we don't actually start the bull market until mid next year. But I don't know. Global liquidity is going up already. Remember, friends, I already showed you this chart here. The global liquidity is literally pumping right now. You see, it's literally accelerating just like before. All right. So now you've seen all this. The interesting part for you to know is, of all these, believe it or not, Bitcoin front runs all that data as it's happening. Okay. Do you know how Bitcoin and Ethereum, they like went down? Yeah, they were front running the data. So you don't use this data and go, oh, I'm now going to put out a trade. No. It's just basically telling you that everything's on track. Okay. So when Bitcoin collapsed down here, liquidity kept sinking. So it pretty much moves it in line, right? It starts pricing in, which means if we do see a rise up of Bitcoin, as it goes up, business ISM will be ticking up with it. All right. So you can't use it as a real predictor of anything. But I guess the most important part is everything is on track. Everything is still on track, okay? And all that business ISM cycle stuff I've shown you, you can literally just look at Ethereum going down this bad, and that's what happens. So with altcoins, unfortunately what they like is they can pay you very, very high. The problem though is if there are delays in the path, because the liquidity is so thin, each month that it gets delayed, people exponentially sell worse and worse and worse and worse, and it spirals faster. So that's the risk you and I take when we're long altcoins. So you have to say, hey, look, man, in the next 18 months, we're going to have a bad period, which is what we've had now, like from a year ago, right? And if it was bad, people are literally accelerating their sell-offs, which is what we've seen with Pulse Chain, Chainlink, Ethereum, everything. They just accelerate out, okay? That's something you and I can't control. You don't know that. In another world, everything just went up normal, like the past cycles. So I'm an optimist. I still believe we're going to make it out. And you didn't know this was going to happen, okay? And all the cucks who said it was going to happen, they're going to be sidelined and short forever anyway. So I'm still bullish, friends, no matter what, okay? I'm still holding out here. And I think so far, so good. Okay, so hopefully what we get to see now as we move forward is those forward indicators show us that they're working and business ISM does go above 52. And hopefully we do get 2 alt-season waves. Okay, and it's going to be tough because after the first alt-season wave, you're probably going to get 30 to 50% of people saying it's literally totally over. I think it's a believer cycle. I'm a believer. What about you? Like, subscribe, Billy Better Know. Catch you soon.